Good morning and welcome. You're watching Market Cafe on ET Now. I am Harsh Saita and with me is Ankita Saxena. In this show, of course, we take you through all that's happening in global markets as well as domestic and global geopolitical news, and then we go stock specific on which stocks you should keep on your radar in trade today. So let's start off with the first piece of that agenda, global markets, and Ankita, talk to us about how global markets are doing.
Good morning to you, Harsh, and good morning and happy Friday to everyone. Yesterday, US markets fell. They cut all the gains that were coming in from a day prior. Stocks fell yesterday after another hot inflation report. The PPI numbers and the initial jobless claim unexpectedly fell for the week ending February the 11th, as per a Labour Department report. Now, January's PPI number rose 0.7% on a month-on-month basis, while the economists surveyed by Dow Jones expected a 0.4% increase. So clearly the PPI number has increased. It was more than what was being expected. The new data that comes after January's consumer price index and a retail sales report were both higher than expected, suggesting that the inflation is still sticky and the Fed may have further to go in their efforts to tame inflation. So CPI number is higher than expected, jobless claims were less than expected, and of course the PPI number has come in more than it was estimated, which means the inflation is still sticking, and that paves the way, of course, for higher interest rates. On the back of that, the Dow Jones Industrial Average shed 431 points. The S&P 500 dropped 1.3% and the Nasdaq Composite fell 1.7% in trade yesterday. Microsoft and Disney contributed the most to the Dow Jones decline, down 2.6% and 3.1% respectively. Now, Tesla also shed more than 5.5% following a vehicle recall weighing on the S&P 500. Let's look at the European markets. Now, European markets were rather choppy. They had a choppy session, slightly higher. They were upbeat through the morning as the CAC index hit an all-time intraday high. However, they traded in the red through most of the afternoon after the US stocks opened lower. DAX and FTSE both ended the day just marginally up 0.1%, but largely flat, ended the day in the green. That was a roundup of the global markets. Harsh, tell us where's the crude at?
Well, yes, crude, Ankita, is at a very interesting position. We're seeing Brent just below the $85 a barrel mark. We're seeing WTI oil at the $78 a barrel mark. And let's, of course, PPI data is in focus. And a couple of presidents of the Federal Reserve have commented on how they believe rates will go from here on. And there is a certain openness with regard to increasing rates. And that's what will really stand out. And that's what continues to stand out because they're willing to believe that there won't be a slowdown even despite them hiking rates. So at the moment, that's really the commentary which is coming through, which is keeping oil under pressure. And US data continues to be in focus because that will really determine as to where oil will go. So at the moment, US data in focus, oil slightly lower is the current theme, 1/3% down as we speak.
All right, Harsh, thank you for that roundup on crude. Now, let's quickly look at all the events that you need to watch out for in today's trading session. First up, we have CRISIL's Q3 earning that's coming in today. We also have the ex-date for rights issue for Capri Global. We also have the ex-date for amalgamation for Inox and PVR, a big merger that everyone is watching out for. And we have the Supreme Court hearing for a fresh PIL in the Adani and Hindenburg case. And we have TRAI meeting with all the telcos on February the 17th, which is today.
Well, and as we did mention, the first focus area today will be on the US Producer Price Index. It's of course an inflation indicator that tracks the wholesale prices, and it rose around 0.7% in the month of January, topping a consensus forecast of a 0.4% increase. So 0.3% higher than what everyone was anticipating. This is the latest inflation report this week to come in above expectations. Meanwhile, when we're talking about initial jobless claims, they unexpectedly fell for the week ending 11th of February. as per Labor Department reports.
And US President Joe Biden and that 3 unmanned aerial objects shot down over the weekend by the US military were most likely tied to private companies, recreation or research institutions. He said that these were not connected to the massive Chinese surveillance balloon that was shot down on February the 4th.
Well, and China imposed fines and sanctions against 2 US defense companies in a further escalation of tensions between Washington and Beijing. Lockheed Martin and a subsidiary, Raytheon Technologies, were added to a list of unreliable entities due to their participation in arms sales to Taiwan. The companies were fined twice the contract value of their arms sales to Taiwan since September of 2020.
And Russian strikes hit critical infrastructure in the western Ukraine city of Kyiv. Now, Lviv is considered one of the relatively safer parts of Ukraine at the opposite end of the country from the eastern front. Now, air raid sirens have been activated in several cities and regions across the country.
And Ankita spoke about Tesla down 5% yesterday in a voluntary recalling of thousands of vehicles equipped with the company's experimental driver assistance software, which is marketed as full self-driving beta or FSD beta in the US according to a recall notice. The FSD beta system may also have trouble responding appropriately to changes in posted speed limits.
And shares of DoorDash jumped as much as 6% in extended trading after the food delivery company reported better than expected sales for the fourth quarter and gave upbeat guidance for the current period.
Well, Anil Mohan, an Indian-American YouTube executive, is taking over as the head of Google-owned video sharing platform. Susan Wojcicki is stepping down from her role in the tech giant that started in her garage 25 years ago. The change of guard comes as YouTube is vying for viewing time with popular short-form video app TikTok and streaming services like Netflix.
Well, that was a roundup of global headlines. It's time for us to slip into a short break. You don't go anywhere. There's lots more news coming up on domestic front and stock-specific news after this short break.
Welcome back. You're watching Market Cafe on ET Now. We quickly switch over to the domestic side of things. Telecom regulator TRAI has cracked the whip on unauthorized pesky promotional messages by telemarketers. In an order, the regulator has directed them to re-verify all registered headers and message templates on the DLT platforms. It has also asked them to block all unverified headers and message templates within 30 and 60 days. My colleague Subita Karir filed this report earlier yesterday.
Like me, are you somebody who's also bothered by these pesky calls and messages by telemarketers who are hounding you every day with 30 to 40 messages per day? Well, then I have some good news for you, because the Telecom Regulatory Authority of India, which has been having meetings with telecom providers and brands, has come out with a directive and is in a mood to regulate all of these unauthorized telemarketers. So what's it saying? Well, a couple of directives and messages have been issued. Number one, all promotional messages must be sent through registered telemarketers only. So they want to have a formal channel for all of these promotional messages, telemarketing messages, and of course only approved templates should be used in promotional messages. Headers and templated messages are currently being misused by telemarketers. So what it also says that all telemarketers sending you messages with 10-digit numbers will all be banned, and telecom service providers will have to make sure that all of these directives are followed, and they have to comply. Any orders that come from the Telecom Regulatory Authority of India to all of these companies, they have to be complied within 30 days. So really the Telecom Regulatory Authority of India really cracking down on these unauthorized telemarketer messages, and now these companies will have to follow, will have to abide by these rules in 30 days only. But how much of this will be able to rectify the problem of unsolicited messages, pesky messages? Well, for that we'll need to wait and watch.
Well, we also have some experts weighing in on this. Let's go across and listen in.
People who mimic a very legitimate site or a legitimate agency, say a bank or an insurance company or something like that, which have a name which is very similar. So a lot of these kinds of, I don't know what to call it, ambush advertising or whatever, are used sometimes for purposes of fraud or to catch an unwary customer and give an impression that they are calling from some agency. Now that may be just for some innocent, although irritating marketing, or it may be for something far more insidious, like a fraud or hoodwinking somebody.
I think I would like to be more positive over here, and the fact that there is a deadline of 30 days, which is a very short time, I would say, for the stakeholders to get their act ready. So I think that first of all, the penalty, for what happens to those people who do not follow the directives of the TRAI. There should be a very crystal clear penalty clause for that.
The ability also needs to be implemented for users. With one click, they should have the ability to actually mark a message spam. That does not exist today. Today, if as a user you want to mark something spam, it's a whole process. You have to send an SMS in a set format, which goes to TRAI, and nobody is going to be able to know that process, know that number, save that number, and mark something spam.
2018, they issued a directive combined for calls as well as SMSs, and by using this DLT platform, DLT basically is blockchain actually, the blockchain, and that was a pioneering effort by Indian regulator, because first time in the world they were trying to solve this problem by using the blockchain, which claims to solve any problem you have.
Well, and we'll switch over. The country's largest housing financier, HDFC Limited, sold 10-year bonds at a coupon rate of 7.97%. The issue received 92 bids and retained 55 bids worth 25,000 crore rupees. The proceeds would be utilized, of course, for financing and refinancing the corporation's housing finance business requirements. Pension funds, insurance companies have participated in the fundraise along with banks and mutual funds as well. The bond was sold at a 49 basis point premium over the 10-year government bond.
And all right, it's time for us to quickly slip into a short break. But before that, we'll take you through the Power Pack lineup on the market that's coming up next. First up, we have Prateek Agarwal of Motilal Oswal on his outlook for the market. We have Soma Sarankara of UCO Bank on the credit growth being intact for the bank. We also have Nilesh Gupta of Vijay Sales and Rupesh Shah of Symphony on the discretionary trends that are playing out in the market. And we have Dinesh.
We slip into a super short break. It's that time of the week, Friday, when we get a to-do list from Ankita on what to do over the weekend. Let's go across to this week's ET Now Recommends to decode that list.
Hello and welcome to ET Now Recommends. I'm Ankita Saxena and I'm back with all the new recommendations for all the upcoming events and new releases so that you don't miss out on any of the fun. So let's get started. The stage is set for the world's #1 DJ, Martin Garrix. Get ready for the biggest ever Sunburn Arena tour across 8 cities this holy season. Catch the award-winning artist perform live in your city on 3rd of March in Bengaluru, 8th of March in Mumbai and 11th of March in Delhi NCR. Limited early bird tickets are live now. Book yours before they sell out. And a new festival has hit the Indian cities with the launch of Oddball Festival. taking place in Mumbai, New Delhi and Bengaluru. Rock and punk trailblazers, the Aristocrats will appear as a headlining artists in all three cities for the inaugural edition and travelling event. Now, while those were the events that you could be attending, here's a slate of new releases that promise entertainment to the fullest. First up is Kartik Aaryan starrer the much-awaited Shehzada. Directed by Rohit Dhawan, the movie focuses on a young middle-class man whose life takes an unexpected turn when he discovers that his biological father is a millionaire. The movie hits the theatres on the 18th of February. And Aditya Roy Kapoor is all set to headline Sandeep Modi's new series, The Night Manager, that's dropping on Disney Plus Hotstar. It is inspired by Tom Hiddleston's Primetime Emmy Award-winning series with the same title. The intriguing plot of the upcoming drama follows an undercover agent who is adamant to bring down a dangerous arms dealer. And finally, Yami Gautam is set to start the new year with a strong performance in Anirudh Roy Chaudhary's thriller drama Lost. The movie, which releases directly on ZEE5, will revolve around a crime reporter who is exposed to a whole new world of politics, love and betrayal that exists in the society. Well, with that, it's a wrap on ET Now Recommends for this week. I'll be back next week with some more recommendations. And well, it's Friday. So Harsh, what are your plans for the weekend?
Well, Night Manager looks quite interesting. I may just dive into that, but it'll totally depend on what my wife wants to watch as well. So.
All right, Harsh, it's always the wife. You do what the wife says.
Absolutely.
All right, he's a smarter one. So let's slip into a short break and...
Welcome back. You're watching Market Cafe on ET Now. I'm going to quickly take you through what Asian markets are up to in trade today. We're looking at red across the board pretty much, other than the Shanghai, which is clinging on to a bit of green. But we'll start off with the Nikkei, down around 0.5%. The Shanghai is up around 0.1% as we speak. The Hang Seng too is down around 0.5%, despite the Shanghai being higher. And we're looking at cuts on the Kospi as well. Early trade lower, the Kospi, it's down around 0.5% as well. In fact, now down around 0.2%, and the Nikkei also down. The ESX 200 also down around 0.5%. So across the board, we're looking at a slight bit of negative, and that's not surprising because the US markets closed 1% plus lower, and the US futures also continue to trend lower. We're looking at Nasdaq futures with cuts of around 0.5% as well. But the other piece that's making news is bond yields. Bond yields have started to go up after that commentary and after the PPI numbers. We're seeing the US 10-year bond yield inch up to the 3.9% mark. So definitely that is something that one must keep an eye out for, because it will impact markets as well. We can see gold prices, they've come off because bond yields have risen. So we're seeing gold come off. It's at around 1838 an ounce at the moment. And lastly, because of the bond yield rise again, the counter impact of that is the dollar index has gone above the 104 mark. So across the board, that's how we're looking at markets, at least before the start today.
All right, that was the Asia Trek. Harsh, thank you so much for that. Let's look at the key con call highlights of Nestle India that reported its Q3 earnings. The management claims that they saw volumes growing by 3.4% this quarter. Now, what are the other major highlights? Well, my colleague Winnie is joining us here for more details. Winnie, over to you.
Absolutely. This was the Q4 current year 22 numbers for Nestle. They've said that they're seeing a growth of around 3.4% in terms of volumes. Overall, the brand power remains strong is what the main highlight is coming in, despite the commodity inflation and volatility. Demand trends in the metro cities, they've seen a double-digit growth. Metro, Mega and Town Class 1 is what they call it. They have seen a double-digit growth there, while in Town Class 2 to 6, they have been impacted in terms of the demand over there, and they've seen a mid-single-digit growth coming in over there. So yes, that's a trend that we're seeing coming in. Now, especially in terms of rural play, Nestle said that they're around 20% of their revenues coming from the rural side, but rural grew at double digits for the company with respect to in terms of the rural growth that we're seeing coming in there. Other than that, in terms of the small packs, they have seen a higher traction coming in. So yes, in terms of tonnage, what we're seeing, the tonnage has seen a reduction coming in. So in terms of the packs that they're buying a smaller packs, while in terms of their down trading is what the key highlight is coming in from the management as well. E-commerce salience has increased for the company to 6.5% of domestic sales. Company will be focusing on premiumization and volume growth going forward. That's going to be the main strategy. And also they've said that there will be a capex plan of around 5,000 crores in the next 3 years, which will be excluding the mergers and acquisition part as well. Morgan Stanley, on the back of its numbers, is staying underweight on Nestle, given a target price of 15,315 rupees per share, because the numbers were below their estimates, and mainly they believe the management will remain focused on penetration-led volume growth.
Well, thanks so much for that, Vinny. And Vinny wearing red reminds me that we're down 100 points on the SGX Nifty as well, down over 0.5% below that 18,000 mark, at least at the moment. That's where we're seeing the open. But quickly moving on, let's concentrate on stock-specific news, or rather continue to focus on that. Lisa is with us. Good morning, Lisa. Take us through all the stocks that are in news today.
Well, a very good morning. A couple of announcements. Ultratech Cement has announced commissioning of its capacities, brownfield capacity, cement capacity at Chhattisgarh, and the greenfield grinding capacity at Odisha. And with this commissioning, the total capacity will be in India will be around 126 metric ton. Moving on to Navin Fluorine, the promoter has sold around 290,000 shares, and this is the third such instance during the year. And as per the company disclosures, the sale of shares is for charity and personal purpose. Minda has offered to buy up to 19.2 million Pricol shares, and as per the terms, the maximum purchase price will be around 209 per share, and that will be through a reverse book build. The base size is up to 13.2 million shares with an upsize of around 6 million shares, and the total purchase offer is up to $48 million. And the sole book runner and broker is Kotak Securities. Moving on to BML, the company said that they are showcasing some of its products at the Aero India 2023. And lastly, on RailTel Corporation, they have received work order from Bangalore Metro Rail Corporation for the supply installation of the IT network infrastructure, and that amounts to 27 crore. Also, they have the AMC will amount to around 6 crore, and that will be for 5 years, which is extendable for another 10 years. Well, these are the stocks that investors have to keep on their radar for today.
And well, Lisa, you also have all the brokerages with you. Tell us, what are the brokerages notes saying this morning?
Well, a couple of brokerage notes, starting with Credit Suisse on Dr. Reddy. They have maintained an underperform with the target price of 4,100 per share. And the underperformance justified on the back of the entry of Apotex in the Suboxone market, which is expected in Q1 FY24. Remember that Suboxone still constitutes around 7% of EBITDA for Dr. Reddy, and the entry of Apotex can potentially impact around 2/5 of the EBITDA from Suboxone for Dr. Reddy. Next is on JP Morgan on KFIN. They have initiated coverage with a neutral at a target price of 320 per share. They say that the concentrated industry structure with long tail annuity revenue setup bodes well for the company. Also, the new verticals have a scope to scale up faster, and the margin guidance of around 40 to 45%. That is way higher than its historical. And lastly, Credit Suisse on capital goods. They say that the investment cycle is picking up further momentum. Also, the order inflows, capital goods import, that adds confidence, and large margin gains re-rating continues, and they have retained a positive stance on capital goods sector. Their top plays are Siemens, L&T, Ultratech, and Cummins. So these are on the brokerage radar for today.
Well, thanks a lot for that, Lisa. And of course, for breaking down both brokerages as well as stocks and news. Quickly moving on, the Securities and Exchange Board of India, SEBI, has asked local hedge funds to declare their futures and options trades and the underlying stocks on which such equity derivative positions were built. They have also been told to disclose when the deals were made and spell out the rationale for the transactions. This is the regulation which could come in to check whether some of the funds overstep their limits in taking short positions in stocks of Adani companies, said a person close to the matter.
And Ramesh Tamani, member of BSE, is bullish on defense and railway PSUs. He also believes that data is the new oil. And this, he's betting big on companies that operate with data. Listen to what he had to say.
Nikunj, I'll tell you the two new sectors that we've been trying to bet on. Some you may be familiar with. Data, as everyone keeps telling you, Nikunj, is the new oil. I mean, that's now a well-known fact out there. Now, data has a lot of components. You've got to aggregate it, you've got to analyze it, you've got to put intelligence out of it. Now, if you look at the companies in India that do specialize in data, I think their employee cost as a percentage of revenues is between 60 and 70%, which tells me two things, that this business is coming to India, because if India is paying 70% in salary cost for this business, it's clearly a business that cannot be done in America or London or Germany. It has to move to India. So there are a lot of new companies in there that are using data either to aggregate it in a database or ship it out in intelligent forms. So I think the first sector of new ideas, if you wish, is we're looking at those set of companies, because we believe that the cost basis of that business also almost ensures, given that we have now good telecommunication and cheap property prices, that the business will shift to India. The second business, which you, as you know, I've been bullish on the last few years, is particularly some of the defense and railway PSUs. And given the government's capex push in railways particularly, I think there's some very cheap stocks, I'll use that word advisedly, cheap stocks in the railway space. And if you notice the last few days, there's been a lot of noise of India becoming an export powerhouse in the defense sector. Now, if India is going to be an export powerhouse on defense, $5 billion is the number bandied around next year. I think a couple of listed companies which will have to benefit dramatically from that push. So I would say you go for data, and then I would still stick to some of the cheaper defense and rail PSUs, particularly because of the capex and export push that they're experiencing.
But are these businesses, especially the defense stroke railway businesses, are these high quality businesses? Because the top line may be great and the government commitment towards defense and railways is strong, but some would argue back and say that these are not the best of the businesses when it comes to return ratios.
Well, I disagree with that. I mean, I'll give you an example of a company that I still own, and I'm only saying it as an example, not for anyone to buy it or anything like that. So please be very careful. You remember, Nikunj, in the early 2000s, we used to buy a company called Bharat Electronics, which I own today also, but I'm not recommending it. I'm just saying that the stock from those lows, it was a 300 crore market cap. It's now a 60,000 crore market cap. So over the years, it's compounded for investors, paid a very rich dividend yield. So I get very, a bit upset with people who trash, throw the baby out of the bathwater. It is your job as an analyst to find the good from the bad, the good PSUs from the bad PSUs. Don't necessarily look at the resource-rich PSUs or the telecom PSUs, but others look at, just like you can fail in the public, in the private sector enterprises, so many businesses in private sectors have failed miserably. So in PSU, and the aggregate of taking all the PSUs in one basket and looking at the returns of 10 years is misnomer, because you're comparing apples and oranges. So look at defense PSU separately, railways PSU separately, commodity PSU separately, and then you'll start making more intelligent decisions. So I completely and totally disagree that the return ratios are bad. In fact, some of these dividend payouts, return on capital, cash flow yields, corporate governance, matches that I have seen in some of the better private sector companies. And at the end of the day, you're making money in them. I mean, that's always the test in the stock market, that are you making sustainable money in them? Because they're paying you dividends and they are, generating cash flow. And I think they are. So, I'm happy, if people are ignoring it, that's okay. It gives me an opportunity to buy these stocks cheaper, which I am. But, we're not necessarily very to PSU. We're very to good PSUs that are delivering for the shareholders. And we have lots of private sector companies. So if you're not comfortable, all means go ahead with the private sector companies. But if you're an analyst sitting in Bombay and trying to figure out cheapness and value and growth and prospects, I don't see how you can ignore that basket.
Well, that was, of course, ace investor Ramesh Damani. But we'll quickly move on. Auto component manufacturer Minda Corp is in the news as it looks to acquire up to almost a 15.7% stake in Pricol via a reverse book building process. Sharad joins in with more details. Sharad.
Well, yes, as per the agencies, Minda Corp is expected to get almost to 15.7% stake. That's roughly, you could say, almost 400 crore of total amount in Precall. Now, do remember that the purchase price is coming in at 209 rupees per share. Now, that's at a slight discount of 0.3% to the current market prices. But the important thing is this process will happen via reverse book building. Now, the important thing also is, will it attract open offer or not? And the answer is no, it won't attract open offer because the company itself is not having any stake and there's not even more than a 25% stake acquisition happening. That's why the open offer won't be attracted. But had the company had 25% stake and 5% stake would have been acquired in a financial year, then the open offer would have been attracted. But now let's look at what are the major shareholding pattern looking like for Precol. And almost 36% is a promoter holding, while for the FPIs hold almost 12%, while in single digits it's for the mutual funds. Now the important mutual funds includes Quant Mutual Fund and Aditya Birla Sun Life Mutual Fund actually having stake in the stock. Apart from this FPIs, if you look at it, we have Nomura, Minerva and also Adios Fund. Now looking at the stock tracking of the prices, the stock is near its 52-week high levels and it has been on a tear since May 2022 lows, up almost 111%, and over the last year itself Precall was up almost 64%.
Well, thank you for those details, Sharad. Now we'll move on to Mercedes-Benz newly appointed MD and CEO Santosh Iyer, who had sparked a debate a few months ago when he said that the SIPs are the luxury cars' biggest competitor in the country. And now in an exclusive chat with ET Now, he clarifies on what he meant by those comments. Are SIPs a big threat to the sales? Well, let's find out what he had to say.
What do you think is going to be 2023 like? Because is it the year where people will focus more on SIPs and savings versus EMI?
Yeah, I think post-COVID we definitely saw a bit of, we call it revenge buying kind of a phenomenon. A lot of pent-up demand was also there because for the last 2 years the overall market was down. And to add to it, we also launched a couple of new products. So we definitely have seen a very big surge in 22. 23, when I look at January, the order intake has been good. So I think the demand momentum still continues. What we have been trying to do is to increase production because, in post-COVID, consumers were ready to wait for 12 months, 18 months for their car. But now in this new world, they want cars at least in 3 to 6 months time, and that's something quite critical. So our entire focus is how do we increase production, how do we now reduce this waiting period. And a higher waiting period also means lower order intake because, as I said, they need cars for some wedding in the family or some birthdays. And if we are unable to provide, then they start feeling, looking out for options or they postpone their purchases. So the entire game for us is now how do we ramp up our production or increase availability and continue to have a good order bank. Coming to savings, I think these are cultural topics. They won't change COVID, post-COVID as fast as what we would wish to. Frankly, I was referring to the top, interesting statistics. Only 4% of US $1 million households own a luxury car in India.
Oh.
This is 60% in Europe or in China, for example. So my reference point was to the $1 million households who still don't invest on a luxury car, but they would like to invest in stock market, nothing wrong. But at some point, you reward yourself, you consume for yourself, and that was the point which, of course, got out of proportion.
Well, yes, very interesting conversation there. We'll quickly switch over. Mumbai has leapfrogged Delhi and made it to the top 10 list, albeit on an infamous one this time around. But this is something that, Delhi is more than happy about. Mumbai has been ranked the world's second most polluted city, and that Delhi is not in the top 10 list, just to be clear, is a positive. The ranking is in terms of the Global Air Quality Index between 29th of January and 8th of February. The data was sourced by a Swiss-based IQ Air that relies on data shared by data from the Central Pollution Control Board. Now, based on the data shared by IQ Air, Mumbai had an AQI of 163 and it was also the third unhealthiest city on the planet. It overtook Delhi again on the 13th of February. The rampant construction and increasing vehicles on the streets, the pollution in Mumbai has been a growing cause of concern.
Well, I guess, Harsh, we'll have to put on our masks back. And with that, it's a wrap on today's show. You don't go anywhere. There's market coming up.